Let's get straight into it. And Andrew, this is one you suggested for our stock of the day. It's a really good one. Pushpay, the New Zealand-based tech stocks, has put out its first half results today. Running the ruler over the numbers, net profit for the period surged to just over $19 million US. Yes, this is a tech stock that makes a profit, up from 5.7 million a year earlier. Operating revenues also higher. Shares, though, have taken an absolute whack today as the company flagged it experienced lower than expected total procession volume growth in the first quarter. Procession volume growth, which they're a platform where you can donate in churches. So procession growth.
Processing volume.
Processing, yeah. I was thinking more a funeral procession or a wedding procession.
Well, maybe appropriate.
In a church, yeah. Also weighing in on investor sentiment, a downgrade to guidance, now expecting earnings to be in the range of 62 to 67 million, trimmed from the 66 to 71 million previously forecast. Andrew, what do you think of the result and Pushpay as a stock?
I'm finding it a bit hard to sit down because the backside's taken a bit of a beating this morning. It was down 20% at one stage, which is just a huge fall, and it's sort of recovered to just 15%. It's such a massive move. So look, as you've said there, some of the headline numbers are pretty good. It's one of those companies, whenever you look at their presentation, you see a lot of these very nice upward staircase kind of graphs where they're just they've done very well for a long time. Lots of good, consistent sales growth. It's a business that's scaled really nicely as well. Like its operating margins like 59% not too long ago, now 69%. So they're doing really well there. The revenue retention.
An operating margin of 69%.
Yes. Sorry, gross margin. Sorry, I should say gross margin of 69%.
Still pretty good.
It's just a good sign of how it's sort of scaling pretty effectively. And net profit up 43%, operating cash flows up 14%. They onboarded a bunch of new clients. So it's done really well. But then why this? So on one hand, no one likes to see the guidance being reduced. Yep. But put that in context, at the midpoint, that was a 6% reduction in guidance, partly as a result of this big investment they're making into the Catholic space. So they've traditionally focused more on the evangelical space. Yep. Catholic space, it's like 1 in 4 Americans claim to be Catholic. It's $30 billion in giving throughout the year there. And this is really underserved. So it's definitely within their wheelhouse. The question is as to whether how much success they have there. So there's an investment that's being made there that's dampening the results. They also, which was interesting, made some comment on their struggles they're having with attracting technology talent, which is a theme that you're seeing a lot lately. Yep. It's a great time to be a developer because you can basically name your price and name the company you want to work for, it seems. But that's probably got the market a little bit worried as well. So disclosure, I'm a big holder in there. I have been since I'm 70 cents, obviously on a split adjusted basis. Right. I just put that in to make me sound like less of an idiot.
And you rode it up to the 870. And
yeah, well, it had a 4-for-1 share split in there as well. So it's kind of, there's all of that. But it's a P on a forward basis. We were just talking before the show, depending on what you want to say, somewhere between 30 and 40. There for a business that's got a long way to run, it's got good traction. That top line growth of 9% was okay, probably not as strong as you would like to see it. So it's a question of, is there something really fundamentally wrong with the business here, or was it a question with the market perhaps having a bit of higher expectation and maybe a bit of a panic reaction? I'm perhaps in the latter camp on this one here. I still think the thesis is pretty much intact. I think you've now got an opportunity to buy it at a more attractive price. But it's hard to it's always hard to sort of say that when the market's sort of screaming you're an idiot.
No. But market said this about Domino's last week. It was down 20%. A lot of the smart money said Domino's good business, 20% pullback. Okay, let's take advantage of that. Yeah. Do you do the same with Pushpay?
I think so.
Okay. Yeah. So a buy at these.
It's a buy it for me. Yeah.
Okay. For a better description of Pushpay, it's basically a CRM for churches, is it? It allows you as a parishioner to donate through the platform, but for the churches, it also gives them analysis of their customers and parishioners, and they're able to
help
put
with
out
engagement and everything like
EDMs and do marketing towards them.
Yep.
Yeah,
And it's a New Zealand tech business.
New Zealand tech business. One of the original investors was the Hulich family, who's a wealthy New Zealand family. They recently sold down, I think, their entire chunk even. So that's been a bit of a weight on the share price for some time. The most recent update from, say, 6 months ago, it must have been, the company flagged that they hadn't really seen much growth in new customers. And that was probably the first sort of scare for the company. But I thought this report, looking at the headline numbers, they managed to arrest that negativity, and we saw a good jump in new customer numbers.
29%
29%. Margins have ticked up again. You look at sort of earnings and you look at revenue, all those numbers are not bad for a company like this, and it continues to have a huge market which remains untapped. So it's a business that we've liked for some time, maybe not as early as Andrew, but most clients are in an okay position as we stand. Some are actually a little bit in negative position, but it's one that we're willing to stay the course on, I think, for now. If it did continue to fall away, we would look to sort of get rid of it, because we have had some clients look to exit just because of the momentum in the underlying business seems to have slowed a little bit from where it was a couple of years ago. But still a high quality business. Now that overhang of a major investor selling, I do think that in time this business can get it right and the momentum can turn upwards.
So a hold for you?
But it's a hold for me. I'm not going to rush in now, let this sort of volatility play out. It is on a long-term support line. Looking at the charts, it's come back basically to the low, what it got to last time, and updated the market and was received negatively. So looking at the growth numbers, looking at the industry it's in, tech, and the multiple it's on, I think it's a relatively attractive proposition compared to a lot of things out there.
Okay.
And just a very quick clarification, the chart that we had on screen before was not split adjusted. So any
Right.
chartists looking at that at home,
Yeah,
please bear in mind that it's
that
not
big
as
drop was the shares.
you got 4 shares for every one.
One.
Yeah.
Yeah.